All right. Good morning, everyone. Happy Tuesday. We are at class time, so let's go in and get started. For those of you who just joined, welcome to the Retiree Insights Staying Informed Together class. My name is Frederick, and I'm your co-presenter for this class. All right. Without further ado, it's now my pleasure to introduce you to your presenter, Courtney. Take it away, Courtney.
Thank you, Frederick, and good morning, everyone. I'm Courtney Klausner from the Sacramento Regional Office. Today, I'm excited to guide you through important information that can help you make the most of your pension and any health care benefits that you may be eligible for. Whether you're newly retired, supporting a retired family member, or simply planning ahead, understanding these benefits can give you confidence at every stage. My goal for each of you is to leave today's class with valuable insights that will help you moving forward. Before I go over the agenda today, I must note that CalPERS is governed by the Public Employees Retirement Law. The information in this class is general, and the retirement law is complex and subject to change. If there is a conflict between the law and the information presented today, any CalPERS decisions will be based on the law. Here's what I'll be reviewing today. First, I'll give you an overview of your CalPERS pension. Then, for those of you to whom it applies, I'll cover managing your health benefits and open enrollment. After that, I'll discuss working after retirement. Next, I'll outline the steps to take when a member passes away. And to wrap things up, I'll highlight some key dates and reminders for the year ahead. Prior to the main presentation, I want to point out a valuable resource I'll reference throughout this class, your MyCalPERS account. Your MyCalPERS account gives you access to important retirement features like checking your retirement benefit payments, reviewing your beneficiary information, updating your tax withholdings, and updating your direct deposit. This slide shows the login and registration page, which is the first thing you'll see when signing in. If you haven't registered yet, you can do so easily by registering for an account on our CalPERS public website, calpers.ca.gov. Otherwise, you can contact CalPERS at 888 CalPERS to initiate a partial registration over the phone, which you'll complete afterward. I promise this truly is the best resource you have available to you for staying up to date and managing your CalPERS information. Now, I'll provide an overview of the essential post-retirement aspects of your CalPERS pension. Let's start with one of the questions members care about most. When will you receive your payment? Your retirement payment is issued monthly at the beginning of each month and reflects the benefits you earned for the previous month. The state controller's office processes all payments and determines both the mailing dates for paper checks and the direct deposit dates for electronic payments. As shown to the right of this slide, you can view the payment schedule for the upcoming year, 2026. You can also find this information and a PDF of the payment schedule on the CalPERS public website. If you currently receive a paper check and want to switch to direct deposit, or if you already use direct deposit and need to update your bank information, you can enroll or make changes electronically or by paper form. All members want to be confident they will be paid on time. So to help ensure this, you can update your direct deposit information at any time by logging into your MyCalPERS account or by completing a direct deposit authorization form and submitting it to CalPERS by mail, fax, or in person at your closest regional office. With direct deposit, your payment is electronically deposited into your bank account, so you don't have to wait for a paper check. Most financial institutions can receive direct deposits so long as they participate in the NACHA network. Whether you set up or change your direct deposit through your MyCalPERS account or by submitting a paper form, CalPERS will send you a confirmation letter. If you can, keep your current bank account open until you receive this letter, which will confirm the date your next benefit payment will be deposited into your new account. If you update your direct deposit via your MyCalPERS account, CalPERS recommends to submit the update by the 15th of a given month to ensure that the update takes effect by the next payday. Otherwise, it will go into effect the following payday. If you update your direct deposit via form, please allow up to 50 calendar days for processing. And if you close your bank account before updating your direct deposit information with CalPERS, your next payment may be sent to the closed account. In that case, the financial institution must return the funds to CalPERS, and CalPERS will need to issue a replacement check, which may delay your payment. So now that you're familiar with your payment options, let's look at how you can view your retirement benefit statements. If you'd like to see your monthly retirement benefit statement, which includes your gross amount, itemized deductions, and net payment, you can easily find it in your MyCalPERS account. Simply go to the Statements section and select Retirement Benefit Statements to view all the details of your monthly payment. So let's take a moment to review how you can update your tax withholding. Because your tax situation may change from year to year, you might need to adjust the federal or California state taxes withheld from your monthly benefit payment. You can make changes at any time through your MyCalPERS account, and updates made online will take effect immediately for your next payment. If you prefer not to make the updates online, you may complete a tax withholding election form and submit it to CalPERS by mail, fax, or in person at your closest regional office. Please note that changes submitted by paper form may take up to 50 calendar days to process. If you live outside of California, you may not be required to pay California state income tax on your CalPERS pension. If you move out of state and no longer want California taxes withheld, be sure to update your state withholding with CalPERS to reflect your new residency. Please remember that while CalPERS administers your pension payments, it cannot provide financial or tax advice. CalPERS can assist with processing your withholding changes, but for help determining the right withholding changes for your situation, consider consulting a qualified financial or tax professional. On the topic of taxes, the 1099-R tax form reports the total income you received during the tax year. It includes the information you'll need to complete your federal and state tax returns. Each year, 1099-R forms are mailed by the end of January and are also available to view and download by logging into your MyCalPERS account. This means that in January 2026, you will be able to access your 2025 1099-R. If you need help understanding your 1099-R form, a detailed explanation of each section is available on the CalPERS public website in the Understanding Your 1099-R section. Now that we've covered taxes, let's talk about benefit adjustments. After your initial retirement calculation, your pension may be updated if CalPERS receives new or revised information, most often reported by your employer. These updates help ensure your benefit accurately reflects your service and your pay. Common reasons for adjustments include payroll reporting corrections, service credit purchases that weren't finalized before retirement, and sick leave conversions reported after your retirement date. If your benefit is adjusted, CalPERS will notify you by mail and provide details of your changes so that you understand how your pension is calculated. Next, let's go over the deductions you can expect to see on your retirement check. Deductions from your retirement check can vary. Some are automatic, including CalPERS health insurance premiums, service credit payments for credit purchased before January 1st, 2020, and mandated liens or levies from the Internal Revenue Service or Franchise Tax Board. Optional deductions are member authorized payments to organizations that have agreements with CalPERS, such as credit union, life insurance premiums, non-CalPERS health premiums, union dues, and charitable donations. If you want to stop an optional deduction, you must contact the organization receiving the payment directly. Many retirees wonder if their retirement checks can grow over time. The answer is yes. One way this can happen is through a cost of living adjustment, otherwise known as a COLA. A COLA is a small annual increase to your CalPERS pension designed to help your retirement benefit keep pace with the rising cost of living. This helps ensure that your pension continues to support your lifestyle, even as prices change over the years. On this slide, you can see how the COLA is calculated and the maximum increase for state, school, and public agency members. Keep in mind that COLA increases are not guaranteed. They depend on the rate of inflation each year. So, when will you receive a cost of living adjustment? If you're eligible, you receive information about your COLA in April, roughly 1 month before it is applied to your retirement check. Your first COLA will appear on your May retirement check in the second calendar year following your retirement, and no action is required on your part to receive it. For example, if you retired on December 31st, 2025, your first COLA would be applied to your May 1st, 2027 check. If you retire, though, on January 1st, 2026, or any day in 2026, you wouldn't receive your first COLA until your May 1st, 2028 retirement check. So it's important to know that COLAs are not guaranteed, and there are circumstances where you may not receive an increase, such as deflation or if inflation is less than 1%. Now that we've covered how your pension can change over time with COLA, it's also important to understand how you can manage and authorize decisions related to your CalPERS benefits. One tool that allows you to do this is the CalPERS Special Power of Attorney, which is a legal document that allows you to appoint someone called your attorney in fact to act on your behalf for CalPERS related matters if you are unable to do so. The CalPERS Special Power of Attorney is specifically designed for use by active and retired CalPERS members and their beneficiaries. You may already have a power of attorney through another resource. However, it may not cover your CalPERS retirement benefits. With a special power of attorney on file, your attorney, in fact, can designate or update your beneficiaries, request information about your retirement check, update your retirement check direct deposit, change your tax withholding, and update your address with CalPERS. This helps provide peace of mind knowing your benefits can be properly managed if you are unable to handle them yourself. However, it's important to know what a CalPERS special power of attorney cannot do. It cannot make medical decisions for you, give authority over your home or other personal property, be used after you pass away, or give your attorney, in fact, access to your MyCalPERS account. To create or update your CalPERS special power of attorney, you'll need to complete the CalPERS special power of attorney form. This form is available as a PDF on the CalPERS public website, and it cannot be submitted electronically. Before submitting the form, you have to make sure your signature is acknowledged and witnessed by either a notary public or two adults 18 or older who are not your attorney in fact. You can submit your completed form by mail, fax, or in person at a regional office. Once your CalPERS special power of attorney has been processed, CalPERS will send a confirmation letter to the address we have on file for you. If you want to cancel an existing CalPERS special power of attorney without submitting a new form, you must notify CalPERS in writing. This cancellation is not effective until CalPERS receives your request. Finally, if you already have a power of attorney through another source, CalPERS can review it to see if it meets our requirements. If it does not specifically authorize CalPERS related actions, unfortunately, it cannot be accepted. So, having reviewed how a special power of attorney lets you manage your CalPERS benefits, it's also important to understand what happens to your benefits after you pass away and how payments are made to your beneficiaries. CalPERS pays any lump sum death benefits to your designated beneficiaries. You can update your beneficiaries for this particular benefit at any time. Please note that your existing beneficiary designation will automatically be revoked if you either get married or enter into a registered domestic partnership, or if you get divorced or have your marriage annulled or domestic partnership terminated, or if you have or adopt a child. If you do not have a valid beneficiary designation in place at the time of your passing, your benefit will be paid to your nearest surviving family member according to statutory order. You can view the statutory order on the CalPERS public website. Since we've covered how to designate lump sum beneficiaries, let's now look at upcoming legislation that will impact post-retirement optional settlements. Post-retirement optional settlements allowed you to choose a payment option that fit your financial goals and that provides for your loved ones. When you retired, you chose how your benefits would be handled after your passing, either your full lifetime allowance or a reduced benefit so a beneficiary could continue receiving payments. Currently, if you divorce after retirement, you can only name a new beneficiary if the court awards you 100% of your retirement interest. Assembly Bill 1246, effective January 1st, 2026, changes this. Even if you keep less than your full benefit, you can now name your new spouse as a beneficiary. This will not affect benefits already assigned to a former spouse. After retirement, you can update your beneficiary designation for this benefit in one of two ways, online or by form. If you make the update online, you will log into your MyCalPERS account, select the Retirement tab, and then click the beneficiaries link. If you make the update by form, you will complete a post-retirement lump sum beneficiary designation form and submit it by mail, fax, or in person at your nearest regional office. The form is available as a PDF on the CalPERS public website and also in our publication, Changing Your Beneficiary or Monthly Benefit After Retirement, publication 98. It's also important to note that a power of attorney can only change a beneficiary if you, the member, have explicitly granted them permission to do so. After retirement, if your lifetime beneficiary or survivor passes away, you must notify CalPERS and provide a death certificate. If they were also a dependent on your health or dental plans, CalPERS will need the certificate to remove them from those benefits. Allow me to transition now to a more favorable subject, verification of your income. Once retired, you may need proof of your CalPERS pension for housing, loans, or other purposes. CalPERS offers three types of letters that you can request. The first is a verification of income letter, which provides your current retirement account balance. And this letter can be sent to a third party for home loans or personal loans. Second, we have a Social Security breakdown letter, which shows your pension amount over a specific date range. And third, CalPERS offers a verification of refund letter. This letter details the amount of your refunded retirement contributions. With this letter, CalPERS cannot send it to a third party. You can easily retrieve any of the three letters I just explained by logging into your MyCalPERS account, selecting Statements, and then clicking Request a Document. For example, if you instantly generate a verification of income letter here, you can download it, email it, or print your letter right away. If you need a more customized letter than the letters offered here, you can contact CalPERS for assistance. You can either send a secure message from your MyCalPERS account and you'll get a response from CalPERS in writing within 5 business days, or you can call 888 CalPERS to make your request over the phone with a CalPERS representative. When you retire, you may choose to relocate. Keep in mind that updating your address is important as it can impact your retirement payments and your health benefits. The quickest and easiest way to update your address is through your MyCalPERS account. Alternatively, you can update your address by calling CalPERS at 888 CalPERS or by submitting an address change form by mail, fax, or in person at a regional office. CalPERS does advise that if you move after the 5th of the month, please submit a mail forwarding request to USPS to prevent any delays. With the key post-retirement details covered, I'd like to reiterate a few important dates to remind you in the coming years. Starting January 1st, Assembly Bill 1246 will take effect. This new law again allows you to designate your new spouse as your beneficiary if you divorce after retirement and do not retain 100% of your CalPERS retirement. Each year, 1099-R forms are mailed by the end of January and are also available for viewing and downloading through your MyCalPERS account. If eligible, your first cost of living adjustment will appear on your May retirement check in the second calendar year after your retirement and annually in May thereafter, if applicable. While your CalPERS pension provides a steady income throughout retirement, it's also important to consider your health benefits if you're eligible through CalPERS. Next, I'll cover how your health benefits work, including details about open enrollment and how you can make changes to your coverage. The eligibility and cost for CalPERS health benefits depends on your employer, length of service, location, and the plan you choose. You may enroll in CalPERS health benefits after retirement if your former employer contracts with CalPERS and you were eligible for health coverage at the time of retirement. However, if more than 120 days pass between your separation date and your retirement date, you will not be able to carry your health benefits into retirement. It's important to note that once you become eligible, you remain eligible, even if you didn't enroll in a CalPERS health plan at the time of retirement. State and CSU employees receive health benefits through CalPERS, and for public agency or school retirees, your health benefits may not be administered by CalPERS. In those cases, you should contact your former employer directly to confirm your health plan options in retirement. For public agency and school members, if your employer stops contracting for CalPERS health benefits, your coverage through CalPERS will end. You will then need to reach out to your former employer to learn about any alternative health plans that may be available. Your eligible dependents will continue to be covered under your CalPERS health plan after your retirement as long as they remain eligible. If you had a eligible dependent at retirement that didn't enroll at the time, they still can join your plan within the 60-day retirement window or any time during a future open enrollment period. Dependents may remain covered after your death, provided they are receiving a monthly survivor benefit and they were eligible for health coverage when you passed away. Eligible dependents include your spouse or legally registered domestic partner, children who are natural, adopted, stepchildren, or children of your registered domestic partner up to age 26, and certified disabled dependent children over age 26 if the disability began before age 26. You can add eligible dependents outside of open enrollment when the following qualifying events occur: marriage or domestic partnership, or birth or adoption of a dependent, or involuntary loss of coverage. While you can remove a dependent at any time, certain situations require that a dependent be mandatorily deleted from your plan. These events include divorce or dissolution of a domestic partnership, given that your former spouse or partner is no longer eligible, death of a dependent, and a child turning age 26 who will be automatically removed unless they are certified disabled dependent. Disabled dependents who became disabled prior to age 26 may remain on your plan. To maintain coverage, a questionnaire and a medical certification from their doctor must be submitted to CalPERS. These forms are available on the CalPERS public website. As required by state law, every 3 years, you must verify your dependent's eligibility by the first date of your birth month. Notifications for this are sent approximately 90 days and 60 days before your birth month to remind you to complete this verification. Please note that disabled dependents and dependents with a parent-child relationship follow a separate re-verification process. Just as dependent verification is essential for maintaining accurate coverage, updating your address and other relevant details when you move is crucial to ensure that your benefits continue without interruption. By doing so, you help make sure you're receiving the appropriate coverage for your new location. You have the option to change your health plan starting 31 days before your move and up to 60 days afterward. Alternatively, you can make changes during open enrollment, which occurs each fall. Before you relocate, be sure to check if your current health plan is available in your new area. If it's not, you'll need to select a new plan. The health plan zip code locator on the CalPERS public website can help you find the available plans in your new location. Even if your current plan is offered in your new area, it's important to update your address with CalPERS so that they can notify your health plan and ensure your information remains accurate. Additionally, if you or any of your dependents become eligible for Medicare, you may need to change your health plan, especially if your current plan doesn't offer Medicare supplement or Medicare managed options. Open enrollment occurs every fall and provides the opportunity to enroll in, change your health plan, add or remove dependents, or cancel your coverage altogether. Any changes made during open enrollment period will take effect on January 1st of the following year. For more detailed information about open enrollment, including important resources, visit the CalPERS public website and explore the Open Enrollment Resources section. There are several ways to update your health plan during the open enrollment period. The easiest method is to make your selection directly through your MyCalPERS account. Alternatively, you can complete the Health Benefits Plan Enrollment for Retirees form and submit it along with any supporting documentation by fax, mail, or in person at your nearest regional office. If you prefer personalized assistance with the change, you can instead call 888 CalPERS or visit your nearest CalPERS regional office in person. Remember that any changes made during open enrollment will always take effect on January 1st of the following year. If you're enrolled in CalPERS health benefits and have a MyCalPERS account, you can easily access important health plan details through the Health tab in your account. The health plan summary page offers an overview of your current coverage, including your plan type, premium costs, and a list of any enrolled dependents. When it's time to make changes to your health plan, whether during open enrollment or due to a move, you can conveniently use the Search Health Plans tool. This feature allows you to compare available plans side by side and even search by doctor name to see which plans are accepted by your preferred providers. Building on our general discussion of health benefits, let's now address a topic that I hear many members often find confusing despite its simplicity: Medicare. Medicare is made up of four parts, each covering different aspects of healthcare. Part A is your hospital insurance. Part B is your outpatient medical insurance. Part C is Medicare Advantage plans, which are offered by private insurance companies that contract with the Centers for Medicare and Medicaid Services. This does not apply to all members. And Part D is a prescription drug coverage. When you or your dependents become eligible for Medicare, you will enroll in premium free Medicare Part A and Medicare Part B. And that's all that is required. If you're already enrolled in a CalPERS Medicare health plan, prescription drug coverage is already included as part of your CalPERS plan. This means you do not need to enroll in Medicare Part D through Social Security Administration. You shouldn't. And you also cannot join a non CalPERS Medicare Part D plan. Enrolling in an outside Medicare Part D plan could put your CalPERS health coverage at risk of being canceled. CalPERS offers three types of Medicare coordinated health plans. First, there is a Medicare Advantage PPO plan. This plan covers Medicare benefits nationwide, including 5 U.S. territories. You can see any doctor who accepts Medicare with this type of plan, and no referrals are needed for specialists. Second is an HMO Medicare Managed Care Plan. With this plan, you do work with a primary care doctor to coordinate your care, and you'll only pay standard copayments for services within the HMO network. And third is a PPO Supplement to Medicare plan. This plan coordinates with Medicare, covering services that Medicare doesn't. Your provider bills Medicare first, and your health plan covers additional costs as needed. Please note that if your current CalPERS basic health plan doesn't offer a Medicare version, you'll need to choose a new plan when transitioning to Medicare. For state and CSU members, dental and vision benefits are offered separately from your health plan. For public agency and school members, CalPERS provides 5 Medicare plans with optional dental and vision coverage at an additional cost. These plans are listed on the left-hand side of this slide, and you can find more details about these plans in the Retirees, Plans and Rates section of the CalPERS website. Enrollment in these plans must be completed through CalPERS. Technically, it is a health plan change, and some plans also require additional forms be submitted. So please be aware that premiums for these optional dental and vision coverages are billed directly by the health plan. If you are already enrolled in Medicare Parts A and B before your 65th birth month, you don't need to take any further action with CalPERS. CalPERS, in coordination with the Centers for Medicare and Medicaid Services, will automatically transition you to a CalPERS Medicare health plan. If you continue working after age 65, though, you can enroll in Medicare Part A through the Social Security Administration. This is at no cost, and you can defer your Medicare Part B until you retire. This helps you avoid late enrollment penalties when you eventually sign up for Part B at a later time. For some, they may be considered ineligible for Medicare, and this is for premium-free Medicare Part A. You may be considered ineligible if you don't qualify based on your own or your spouse's work history, or you're deferring Part B because you or your spouse are still working and both have employer group health insurance. In these cases, you will need to complete and submit an ineligibility and Medicare certification form to CalPERS, available on the CalPERS public website. If you retired from the state of California or the California State University system, you may be eligible to receive a Medicare Part B reimbursement from CalPERS. Medicare reimbursement covers the difference between the state's coordination, or I should say contribution toward your health benefits, and your Medicare Part B premium. If you or your dependents are eligible for Medicare Part B reimbursement, CalPERS will automatically reimburse the eligible amount of the standard Medicare Part B premium beginning the date of your enrollment into a CalPERS Medicare health plan. This reimbursement will be added directly to your CalPERS pension check each month, and the reimbursement will be listed on your retirement check as Medicare reimbursement. You may also qualify for a higher reimbursement if you pay what's called an income related monthly adjustment amount. CalPERS calls this an IRMA, and this increases your standard Medicare Part B premium based on your income level. If this scenario applies to you, please contact CalPERS for assistance. Along with staying on top of your Medicare enrollment and reimbursement details, and as a reminder, there are key health milestones to keep in mind for the year ahead. First, open enrollment occurs each fall, starting in mid-September and ending in October. The dates for this vary. Second, every 3 years, be prepared for your dependent eligibility verification. Once again, about 90 days and 60 days before the first of your birth month, you will receive a notification from CalPERS to submit your dependent verification documents to CalPERS. For example, if you completed dependent eligibility verification in 2023, you'll need to do so again in 2026, then again in 2029, and so on. And I apologize, there is no way to get around this to keep your dependents on your health plan. As a reminder, those with disabled dependents and those with a parent-child relationship have a separate re-verification process. Following our coverage of health benefits and open enrollment, I'll explain the options available for working after retirement. After enjoying some time in retirement, you may choose to return to the workforce. As a service retirement retiree, you have the flexibility to be self employed or work for a non CalPERS employer without limitations or restrictions. I would say this is the easier path. Otherwise, if you wish to work for a CalPERS covered employer, you can absolutely do so. You have options. You can either return to work as a retired annuitant or pursue a more permanent path by reinstating to active employment. Please note that this information applies only to service retirement retirees. Those who retired under disability or industrial disability retirement are subject to different rules and restrictions. With that in mind, let's take a closer look at the process and options for returning to work as a retired annuitant. If you plan to return to work for a CalPERS covered employer, there are several important restrictions to keep in mind. Firstly, there is a waiting period. For most retirees, they must wait 180 days before returning to work, though some exceptions may apply. Regarding unemployment benefits, you must verify that you have not received unemployment benefits from a CalPERS covered employer in the past 12 months. Also, the position type matters. The role must be limited duration, meaning it's not permanent. Typically, these positions have a defined end date or are funded for a specific time frame, for example, 12 or 24 months. When the duration ends, the appointment usually expires unless it is extended or converted to a permanent position. And very importantly, there is a limit on work hours. You may work a maximum of 960 hours per fiscal year, which is July 1st through June 30th. In addition to the 180-day waiting period, there is what's called a bona fide separation of service requirement that applies only if you retire younger than your normal retirement age. Your normal retirement age is based on the age listed in the title of your retirement benefit formula. For example, if you retire under the 2% at 55 formula, your normal retirement age is 55. If you instead retired under the 2% at 62 formula, your normal retirement age is 62. If you worked under multiple retirement formulas, your normal retirement age is determined by the highest benefit formula, regardless of when you worked under each formula. If you retire before your normal retirement age, there are two conditions that must be met. The first is that you cannot have any verbal or written agreement with a CalPERS employer to return to work before retiring. The second is you must have a 60-day separation in service before your retirement day and the start of employment as a retired annuitant. All retirees under normal retirement age must satisfy the bona fide separation requirement, even if an exception to the 180-day waiting period applies. In many cases, these two requirements can be satisfied simultaneously. The only exception to the bona fide separation rule occurs during a declared state of emergency, such as a natural disaster or public health emergencies like the recent pandemic. If you wish to return to work for a CalPERS employer as a retiree, you must apply for temporary positions directly through the employer. The decision to hire you rests entirely with the employer. Before accepting any position, it's important to confirm whether the employer participates in CalPERS retirement benefits. Also, inform the employer that you are a CalPERS retiree and verify your position is temporary since both permanent full-time and part-time positions are not allowed. And finally, ensure that your pay falls within the minimum and maximum monthly base salary for comparable duties as listed on the publicly available pay schedule. Also, CalPERS may treat positions with third-party employers or independent contractors as what we call employee-employer relationships. If so, these positions are subject to the rules governing return to work retirees, which means that you must submit a copy of your employment contract to CalPERS for review before accepting the position. And once employed, both you and your employer are responsible for ensuring that your employment complies with CalPERS rules and state law. If your employment violates CalPERS rules or state law, you may be required to have your retirement reinstated retroactively to the date the unauthorized employment began. You don't want this to happen. This could create financial hardship as you would be required to return any pension payments received during the period of violation and pay along with your employer the retirement contributions owed for that same period. So this can be a very big price tag. Even if the violation does not trigger a reinstatement, unlawful employment after retirement may still require repayment of any pension payments received during that time. To avoid potential issues, it's important to review the Employment After Retirement publication, Pub 33, before returning to work as a retired annuitant for a CalPERS employer. Also, in Publication 33, you can find information about where to submit your contract if you are interested in working as an independent contractor. As a retired annuitant, temporary employment with a CalPERS employer, it does not allow you to accrue service credit or any additional retirement benefits. It's just a nice extra paycheck in addition to your pension check. However, you do have the option to reinstate into a permanent position with a CalPERS employer after retirement. This is called reinstatement. Reinstatement would allow you to earn additional service credit, and you could then choose to retire again at a later date. Although reinstatement and subsequent re retirement may allow you to earn additional benefits, resulting in a higher pension calculation, it's also important to note that it may also impact other benefits, such as health coverage or any golden handshake incentives you may have previously received. If you return to work for a CalPERS employer in a permanent position, whether part time or full time, you are required to reinstate from retirement to active employment. Reinstatement is mandatory for all permanent positions, even those requiring fewer than 960 hours in a fiscal year. To voluntarily reinstate, you must complete and submit your application provided in a guide to your CalPERS reinstatement from retirement, publication 37. You can also do this by mail, fax, or in person at a regional office. Before submitting the application to CalPERS, you must have a confirmed start or hire date with your employer. Once submitted, please allow up to 30 days for CalPERS to process and approve your reinstatement. Moving on from our discussion of working after retirement, I'll outline the steps to take when a CalPERS member passes away. Not a fun subject, but something very important to discuss. When a member passes away, it is necessary to notify CalPERS. This can be done by anyone, either through a phone call, online via the CalPERS public website, or in person at one of the regional offices. To process the notification, CalPERS will need the following information: the name and social security number or CalPERS ID of the deceased member, the date of passing, the contact information for the surviving spouse, registered domestic partner, closest next of kin, or the executor of the estate, and the contact information for the person reporting the passing. Once CalPERS receives the necessary information, CalPERS will send the required forms to the beneficiary, next of kin, or the individual who reported the death for completion and return. The completed forms serve as the formal application for death or survivor benefits and help identify the beneficiaries who may be legally entitled to receive these benefits. Along with the completed forms, CalPERS requires a copy of the death certificate to be provided. Additional documentation, such as a marriage certificate or birth certificate, may also be requested if a monthly benefit payment is to be issued. One way to notify CalPERS of a passing is online by using the Submit a Death Notification link on the CalPERS public website as shown here. It's crucial to report a death to CalPERS promptly to ensure that the benefits are stopped on time and to avoid potential overpayments. Since various factors influence death benefits, the exact amount payable can only be determined by CalPERS after CalPERS receives and reviews all necessary forms and documentation. For assistance with the death benefits process, CalPERS is ready to help. You can refer to a guide to your CalPERS retired member death benefits. This is publication 31 for more information. You can also log into your My CalPERS account and send a secure message to CalPERS, which will respond to in writing within 5 business days. You can call 888 CalPERS to speak to a representative over the phone, or if you would like in person support, please visit your closest regional office. With that important information addressed, I'll now highlight key dates and reminders for the upcoming year ahead as we wrap up today's presentation. As a reminder, effective January 1st, 2026, Assembly Bill 1246 will take effect. Under this new law, if you divorce after retirement and do not retain 100% of your CalPERS retirement, you will be allowed to designate your new spouse as your beneficiary. Each year, 1099-R forms are mailed by the end of January and are also available for viewing and downloading through your MyCalPERS account. If eligible, your first cost of living adjustment will appear on your May retirement check in the second calendar year after your retirement and annually in May thereafter, if applicable. Open enrollment occurs each fall, starting in mid-September and ending in October. Exact dates vary each year, so be sure to check the schedule on the CalPERS public website and submit any open enrollment changes before the deadline. Finally, every 3 years, be prepared for your dependent eligibility verification. About 90 days and 60 days before the first day of your birth month, you will receive a notice to submit your dependent verification documents to CalPERS.
This time we've come to an end of the class. I would like to thank you for participating in the Retiree Insights Staying Informed Together class. To help you remember what was discussed here today, the link to the resource guide is available in the chat. Upon leaving the session, you'll immediately be prompted to complete a class evaluation. We'd greatly appreciate any feedback as it helps us improve our classes to fit your needs. Thank you once again for joining us and have a great rest of your day.
Thank
Bye, everyone.
you. Have a great day.